Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. I'm your host, Zen Sams. Up in just a few minutes in our Innovation and Tech segment, brought to you by Caldwell Soames and OGPay.com, we're joined by a regular contributor, Paul Caldwell, and today he is joined by Vincent Molinari, founder and CEO of Fintech.tv. Vince is a globally recognized thought leader on the modernization of securities law and a leader at the intersection of breakthrough innovation and technology solutions. He is the host of the Digital Asset Report and the Impact shows filmed at the New York Stock Exchange and NASDAQ. Today, we're chatting about where the fintech industry is headed amidst the digital process, but specifically about cross-border payments and ease of use for the 1.7 billion people in this world that are unbanked and underbanked, accessing all these fintech services, all but with their smartphones. Now, the immigrant community in the US face one of the lesser known misfortunes of the modern economy, with the prevalence of unbanked and underbanked individuals who have no access to many of the benefits that the digital economy provides. Unbanked individuals lack access to bank accounts, while underbanked individuals have access to bank accounts, but for different reasons. They rely on alternative non-bank financial solutions to meet some of their financial needs. Even those who are prone to utilize bank-like financial solutions must face the problem of legacy technology solutions, which are inefficient and quite expensive. This exposes millions of underbanked immigrants in the US to face a fierce, vicious cycle. They live in a cash-based economy and have no track of their financial performance, which limits their access to traditional financial services and other digital tools, forcing them to go with inefficient legacy high-fee alternatives, which makes it harder to fulfill their financial goals. A catch-22, so to speak. Here to chat fintech, blockchain, and the pathway out of poverty are my experts at hand, Paul Caldwell and Vince Molinari. Welcome to the show, gentlemen.
Thank you so much.
Hi, Zen.
To be here.
All right, nice to meet you, gentlemen. Okay, Paul, I'll start with you. So many of these immigrants and their relatives could be greatly aided by real-time efficient digital cross-border payment solutions, which allow an individual to receive funds instantly in every mobile device and without the hassle of the hidden costs. Innovative cross-border transfer solutions reduce the burden that underbanked communities' populations must face, reducing their need to seek exploitative or inefficient options. A truly real-time cross-border payment platform can ease their struggles, offering access to financial solutions tailored specifically to their needs. Talk to me about why fintech platforms should be catering to these needs, and how is OGPay, for one, stepping up to these needs?
Zen, that's a great question. It's not a new question. It's or a new problem. It's been around a long time, and I dare to say it will be around for a long time. The fintech, the financial technology, doesn't just live in the new age of high valuations and startups and mobile wallets and all of that. There's a lot that's going on in fintech, even in traditional banking sector, like the new upcoming 24/7 365 ACH on the Nacha platform. That's a very advanced technology that will also allow bridges and frameworks to be built globally between real-time transfers of money and the banking systems in other countries and the central banks of other countries. So that's very interesting. But to your question about something like an OGPay, it's a very interesting thing because wallet-to-wallet transfers are instant. They can be, and they should be, just an instant transfer of money, one person to another, one subscriber or one wallet holder to another. Whether that's merchant, a consumer wallet to a merchant wallet, a consumer wallet to a consumer wallet, or a merchant wallet to a merchant wallet. So these technologies can really help increase efficiencies. They're not just disruptive, they actually can be transformative and transform how people think about how they send and receive their money. The old Western Union days are gone, going to the grocery store and filling out a paper to send $200 to Mexico from Texas, or hopefully far in the rear view mirror, although it happens every day in the tune of billions of dollars. So from a technical perspective, it's sort of like beyond where the market actually is. So I think those are some of the things. Another thing that I think is really important that we're seeing happening now, that it's not even something that was ever planned, but on that particular platform that you mentioned, OG Pay, they have a roundup feature for charities where people can select roundup, and their purchases on the OG Pay Visa or whatever will round up to the next dollar and go to the charity of their choice. Interestingly, that's a global thing.
I
So
love that.
imagine the Operation Underground Railroad for missing and exploited children to prevent child slavery and so forth. Imagine them being able to pull in, as they are now through that platform, donations from people that round up in Uganda and all of that. So it's not just about giving the unbanked and the underbanked in these underprivileged places an opportunity and a way to transfer money or to get money on a platform that they can then use with a Visa card or whatever. It's also about bringing them more broadly and deeply into the global economy, allowing them to participate in things like that.
Well
And
said.
then they become part of it.
Yeah,
And then if
that's
they become
important. And
part of it, they have a, yeah,
it's important
that's,
to become part of it, and it's important to keep it going for social impact, and social
right.
activism now could be even verified and tracked on the blockchain, which brings me to my next point. Vincent, blockchain technology is revamping the fintech industry in a myriad of ways, such as by eliminating third parties, reducing operational time and cost, enhancing the identity verification process, all of this great stuff. But the fintech industry is recognizing the transformative impact of blockchain technology for generating more revenue, improving the end user experience, the delivery process efficiency. Talk to me about what is needed in fintech and what is missing to ensure a seamless transition into Web 3.0.
Wow. So that was the softball question, right?
Yeah.
But, Zen, I think there's so much here when we think about the digital transformation. And I think it goes to the core of what Paul was just talking about. This is not a new problem that we're experiencing. It's how do we solve for that problem? So I think when we look at digital transformation, and I think part of it, all of this, when we talk about underbanked, non-banked, engaging the less fortunate, is our own personal responsibility to move those into our global ecosystem. That goes to everything that you talked about, an identity. It's access to commerce, it's access to banking systems, finance in the next generation of technologies, where we move from a society of scarcity to one of surplus. So I think if we frame that back, what do we really need first and foremost? It's closing the digital divide, right? Particularly when we talk outside the United States, but even in rural communities where we need to engage connectivity, right? And closing that digital divide, that starts to speak to education, awareness, better healthcare system. And predominantly here, when we talk about the removing friction for connectivity for financial services. And Paul's 100% right. Although Western Union is indeed antiquated from a technology standpoint, they are the legacy player who takes a huge scrape in the process. And if you think about $20, $15 of $100, particularly globally, that's an amount of money that helps feed a family that's being, frankly, in my view, exploited.
Yes.
So I think it's more technology solutions chasing that inefficiency that allows us to engage and bring underbanked and non-banked into the society, because if you now have a device and you're connected, you are part of the new society, right? You're all of a sudden you can have a level, whether it is a real-time debit wallet, whether you're having engagement in couponing, whether you even can get an Uber now, right?
That's right.
You
Yep.
change the very trajectory. And then think about education, and I'll say financial literacy. So it becomes a very powerful feedback loop. And I think for me, it goes back to closing the digital divide is the paramount piece.
Yes, and it's power to the people. This is the rise of the creator economy in many respects, and fintech makes up the lion's share in the blockchain market, and for a good reason. The fintech blockchain market is expected to reach a valuation of $36 billion by the end of the year 2028. Paul, which is interesting, right? Like, I mean, those are numbers. So the finance domain, Paul, even after being a recipient of multiple technology integrations and advancements, continues to operate as a centralized model, with the center being the financial institutions and governments. While an age-old tradition, financial service users have started doubting its value, myself included. This doubt has given birth to a more transparent solution, which is blockchain development services. And the technology has added another dimension to the fintech landscape, the one that has evolved as a tech-based revolution in the financial sector. It has offered the tremendous potential to the fintech industry by bringing significant changes to business models and operating processes. Talk to me about ODC, the original digital corporation, and how OG Pay is adapting to Web 3.0. You have about 2 minutes.
Okay. I think with Original Digital Corporation has, they have OG Pay is one of their platforms. And Original Digital is one of the companies inside our privately held companies fund. So we've been with them now for 4 years, or just maybe under 4 years in the portfolio. And one of the things that we found is that the reality is the technology is always out front of the market. And it's important, though, to build technology that matters to the market, because it's about, I believe, the only way these companies truly scale in the long term, beyond all the crazy membership per subscriber valuations a fintech company can get, no matter if they really inform value in the market or not. I think it's really important for long stay companies to aggregate mind share. And I think if you get enough mind share around something that's transformative, you get market share as a default. And then you have to just defend that, build moats around it, and protect it. I think that this decentralization of certain aspects that fintech solutions can bring to the consumer creates an added value. It's not necessarily a replacement value all the time. It can just be an added value, an add-on value, and then they will decide to replace the old with the new.
Yes.
There are, it's a noisy space out there. If you're building a fintech wallet right now, for example, okay, everything sounds really good, but what are you going to do to get Mary Smith in the U.S. or Paola somebody in Brazil to want to put your app on her already noisy phone, busy phone screen where she's got her PayPal or Venmo or banking, her finance.
So ease of use is what you're talking about.
Ease of use, simplicity, and
all of this matters.
Tangible and real value for that person, so they want to be a part of it. We're way out there now with where you could just convince people, or where you can just buy people by giving a referral fee for somebody to put your wallet. That's fine, but it has no stickability, no sustainability. And the CAC on that, CAC meaning CAC, customer acquisition costs, are extremely high relative to what they need to be. So,
yes, I don't mean to cut you off, but I want to get Vincent in here. We have about 1.5 minutes left. Vincent, let's chat the challenges in the fintech industry that blockchain addresses, like dependency on a centralized system, right? So though fintech solutions do offer a sense of convenience, the actual power is still in the hands of third parties. This is the first challenge that has been resolved with the advent of blockchain in fintech. Is mass adoption close, or are we still facing challenges as a lack of knowledge and education regarding fintech and blockchain applications in merchant still is a prevailing factor?
Oh my goodness, I think we've got a while to go to think about mass adoption. I think as we go through some of the iterations and these big disasters that we've had rather recently, I think we start to demonstrate some of the challenges with our current frameworks around blockchain decentralization, where it largely looks a whole lot less decentralized than theoretically it should be. So that is creating some more challenges of adoption, concerns that I think elongates the process to mass adoption. So I think we're going through this cycle where we are going to be thinking about more regulation than less. How do we have investor protection? What are balance sheet or risk management, capital accounts, disclosures that kind of move a little bit more to a centralized finance model than a fully decentralized? So I think we are in a clear evolution versus a full revolution. And that is going to take some time. And I continue to say it, I think we're still building the stadium. When people talk about we're in the early innings, I think we're still building the stadiums, and the game is beginning to be played. And we've got to figure out what game are we actually playing. So I think it's a little bit more than I'd like to think that before we have mass adoption. But I think you're right, that user interface, ease of use, comfort in the process is getting better and better.
Oh, yeah, it is. It's definitely getting better. People are now starting to talk about it. And at the end of the day, Really, when you look at DeFi is all about the merging of fintech with blockchain. Although the two are not exactly the same, there's a lot of crossover between the use cases in the financial sector. And blockchain for finance is known for its decentralized, distributed, immutable, and transparent digital ledger technology, which really does offer a new type of security and freedom. And DeFi companies with blockchain elements do create an open alternative to everyday financial elements. So I think we're headed in a great direction. We just got to keep the education flowing. We are out of time, gentlemen, but thank you so much both for piping in here and simplifying the complicated for the average listener.
Thank you so much, Zen.
My pleasure.
Guys, you definitely have to check out our Innovation and Tech segment right here every Saturday night. That was our Innovation and Tech segment brought to you by Caldwell Soames and ogpay.com. Do check out Vincent Molinari, founder and CEO of Fintech.tv. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. We'll be right back after this.
A Moment of Zen is brought to you by Caldwell Soames Incorporated, investing globally in transformative businesses like Original Digital Corporation, or ODC. ODC develops advanced consumer and commercial fintech solutions such as OGPay, which will transform the way you manage your money. From sending and receiving money globally for free, paying for goods and services in person and online, pay bills, buy and sell digital currencies, all while earning interest. OGPay is easy to set up, FDIC insured, and your information is secured. Check out ogpay.com.
Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. Welcoming back to our segment now is Vincent Molinari and Paul Caldwell. Welcome back, gentlemen.
Great to be here.
Hi, Zen.
All right, Paul, nice to have you both back. Thank you for joining. All right, Paul, let's come back with you. So in the fintech market, time is money. So by cutting down the dependency on multiple people, making the process public to all, and reducing the time involved, blockchain tech has again proved to be one of the fintech trends that can reduce the cost by nearly 50%. How is ogpay.com contributing to this narrative? What is the cost to users, and how is it simplifying people's lives?
Well, I think the most important component to all of that when you start talking about cost is unburdening the consumer with cost and moving the cost into the back office and knowing how to make money with your financial technology in the back office, not having to burden the consumer with heavy fees. If you've ever gone and secured a green dot card at Walgreens and you see what you pay for that thing, or what the unbanked or underbanked person that's typically the consumer that uses that, the heavy fees that are there are unbelievable. How much it costs, or a payday loan, or if you ever go into a pawn shop and try to get a payday loan just as an experiment, look at the fees. Or even if you just go try to get one of these cash register Visa cards and look at how much money you actually pay, and then you even pay to reload it for the pleasure of putting your own money on it, you have to pay yet again. Moving those fees to the back office so a company can still make money, like doing real deals with Visa as a principal partner and being able to get interchange fees from Visa for that debit card versus having to get money only from the consumer. But because it's not just a third party, you're your third or fourth in the food chain, and so everybody has to make money in the middle. If you go direct and you can build relationships back end, and you have technology that allows that to work together, you get things like the ability to settle a crypto transaction, for example, onto a Visa debit card at very little cost to the consumer, and then they can use that card for free, just like they would any other debit card from their bank, or being able to load their paycheck on there for nothing, for free, because the money's made on how the transactions happen in the back end through Nacha and the ACH platforms. So there are ways to make money if you do it wisely, I think, where you can start pulling those fees back into the back office and covering those costs and making profit versus having to just get them through the subscriber themselves. Now, there are subscriber fees that are perfectly viable and valuable. If someone wants to pull cash off of an ATM, there's an ATM fee. I get that. There needs to be that because there are costs. But I think the beauty of the fintech and the blockchain efficiencies that blockchain can bring, I guess I should say, are really on the back end, so that you can reduce the exposure of heavy cost-laden opportunities or programs to the consumer. That's sort of one of the OG Pay mantras, that we've been living with for 3.5 years with those guys, and it's refreshing.
Yeah, it's fascinating stuff because you're solving real world issues. And if you really think of it, DeFi is, in essence, an emerging financial technology based on blockchain that reduces the control of banks on financial services and money. And over the course of decades, I feel we're also going to notice that digital ledgers will experience a transformation in how we receive, send, store, and manage our money. If you look at some facts, JP Morgan on April 12th of last year, of 2021, stated that they have been leveraging the power of blockchain for improving money transfers, that they're using blockchain technology for lowering the verification time needed for making large payments. So you see the adoption happening. It's just happening, not as fast as we would like it, the ones that are speaking this language. Vincent, let's chat regulatory compliance, because this is what you do and what you do best. This is, again, one of the prime blockchain use cases in the fintech sector. With global demand for regulatory services predicted to bolster in the upcoming years, fintech companies are adopting blockchain to upgrade regulatory compliances. They're relying upon this technology to track each and every verified transaction and record all the transactions taken by the associated people, if you will, so that regulators do not require to confirm the authenticity of the record, right? It's getting done. How does a fintech app remain compliant and trustworthy if they are getting into the game now?
Wonderful question. And I guess it depends whether you want to ask the SEC, CFTC, Department of Treasury, all of the above, as we're in this process of learning, right? So for me, every system on Wall Street and in finance has changed over time with the advent of the most modern technology, making it more efficient. And we've seen that through electronic trading, high frequency trading, right? Where we have these efficiencies, right? We're talking about efficiencies attacking a pain point and creating smaller margins, greater volumes, right? So we see this rinse and repeat. That's exactly where we are with blockchain being recognized as the next component to create efficiencies, transparencies, capital markets, secondary liquidity, fintech more broadly. Where the rub comes when we think about decentralized and we think about regulation, when we begin to think about a fiduciary responsibility, trading, clearance, settlement, depository. So although the technology may be light years ahead and so much more efficient, we still are dealing with the 1933 and 34 Acts of securities law. So we have this disconnect. So how do you modernize securities law to help take advantage of the most efficient, transparent technologies that give us better marketplaces? So we have protectionism going on one hand, legacy regulation, trying to marry itself with the best technology. So it is incumbent, I think, particularly some of the messaging coming out of the SEC this week again, they're looking at regulation by enforcement, which is not the best practice, in my opinion, which is going to slow some things down. So I think a lot of fintechs have no choice but to adopt more regulation within their systems so that they can continue to scale and continue to advocate for more modernizations of law.
Well said. Well said. You definitely have a great grip on, the bird's eye view of what really is happening, what needs to happen, and how things are going to start to evolve. You have a great sense of where the industry is going because you talk about this every day. Paul, any closing thoughts?
The only thing I would say is that fintech comes off the tongue very easily. Fintech, right? Everybody talks about fintech. But I think to Vince's point, I just want to illuminate one thing that he said, and that is the centralization of the way that money works. Simply put, when you get to settlements and you get into secondary markets and you get into the regulatory frameworks that we have to operate, everybody has to operate within, you start to get into some very serious conversations, because these are all about responsibility and making sure people aren't taken advantage of. There's a big confusion when you talk about fintech. It's almost like when some people, when they talk about blockchain, they actually think they're talking about cryptocurrencies. This couldn't be they could not be two different conversations anymore. They are very different conversations, but people lump them together, and people lump fintech together with financial services and transaction processing and settlements and there is so much to do to get a transaction done that I think the smartest fintech companies right now are not concerned necessarily about future proofing per se. I think they have to be kind of now proofing to the current regulatory environment. I think they have to build to where they can leverage the current regulatory environment to advantage so they can stay relevant in the marketplace while they are using advanced technology to do that. It's not about talking about the technology first and then thinking about the regulatory frameworks, because if you do that, you're going to be short-lived one way or another. But if you build a technology that uses the existing frameworks, which is why I like the guys over at Original Digital, they all come from Citibank and other places. They built this technology around the existing regulatory frameworks, within those frameworks, to use advanced technology to be able to operate within the existing regulatory frameworks around the world in many, many countries as well, not just the United States. So I think that really matters. But I just wanted to clear that up, because I think fintech, like blockchain or crypto, they all come off the tongue very easily. But as Vince said, there's a lot of work to do. And I love this analogy about building the stadium when we're really haven't not even picked the teams yet.
Yeah, I love
like
that too. We're going to coin that. We're going to coin that, Vince.
No, it's
Well,
absolutely. I 100% am aligned with that. Yeah.
okay, well, we are out of time, gentlemen. Thank you both for coming on. Always a pleasure.
Thank you.
Thanks, Zen.
Blockchain tech is, in fact, revolutionizing fintech, guys, without a doubt. Revamping the industry, eliminating third parties, reducing operational time and cost, enhancing the identity verification processes we've been talking about, and just so much more. These benefits of blockchain in finance are here to help the sector transform digitally. That's the bottom line. And you have to trust the process, and you have to remain educated. That was our Innovation and Tech segment, brought to you by Caldwell Soames and ogpay.com. Make sure you're definitely checking out Vincent Molinari, founder and CEO of Fintech.tv, and of course, our regular contributor, Paul Caldwell. Always a pleasure. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York, iHeartRadio. We'll be right back after this.